Okay, so hi everyone. My name is Ralph. I am a licensed real estate broker, and I just wish everyone a happy new year, happy 2025. It's a very challenging year ahead for me as a licensed professional practicing the real estate market, the real estate industry here in the Philippines, primarily within Metro Manila. But I'm looking forward to a very positive outlook, not only for myself as a broker, but also for my clients. So this year, there's so many challenges, and I wrote this article addressing partially some issues that's all around the internet and, of course, all over the news. So I wrote this article titled "What the Bubble Trouble Means for Property Owners and Prospective Buyers This 2025." We've seen so many headlines like Metro Manila condo oversupply now equivalent to 34 months. Property prices have been declining in Metro Manila, and it won't be good for the economy, it won't be good for property owners, and of course for future buyers. There's so much noise right now from reputable news outlets, credible property vloggers and owners, and up to a few travel influencers who have little to no experience in owning a property here in the Philippines. When the news broke out and each article was published every single day, it has triggered concerning market responses from property owners and soon-to-be buyers alike. Now, don't get me wrong, I am a property owner myself, and the current real estate landscape bothers me as well, not only as a property owner, but to a greater extent as a licensed real estate broker who focuses primarily in the greater cities of Metro Manila. So what's the history and why are we here? There are numerous speculations, one leading to the other, that would link primarily the Philippine offshore gaming operators or the POGO industry, and I think the aggressive upscaling both in the property prices and property features of property developments from notable developers here in Metro Manila or in the country. There are a couple of real estate research firms out there who's very vocal about the situation, and they would strongly agree that the vacancies and slowdown of real estate demand are partly due to the exit of the POGO industry. A lot of speculators, including me, or buyers, sellers, landlords, or lessors, and a lot more of other real estate practitioners believe that the POGO industry started in 2016, but let's dig in deeper. Just Google it. A few clicks here, a few keywords there, and you will see that the POGO industry started silently in as early as 2003. It was only in 2016 when the then current president granted leniency in gambling policies to boost government revenues and, just to create more jobs for Filipinos. I started my real estate career in 2014 as a real estate agent in one of the country's oldest and flagship real estate brands, and my clients were primarily local citizens, with a few, of course, residing from overseas or out of the country. I saw how fast-paced and successful the industry was. It was growing, it was booming, transactions were everywhere, it was left and right, and at one point, this sector, the real estate sector, next to construction, electricity, gas, and other utilities, gave rise and contributed to making the country the rising tiger of Asia. The Philippines was an interesting choice of address for many people. It was fit for business, fit for foreign investments. Coupled with Chinese locators and bulk buyers, it was the perfect place to invest in. The pre-selling property demand across all developers was so high, both from local locators, local citizens, or even foreign investors. And there were multiple price increases that were very consistent and had always been attributed to capital appreciation, which then eventually it built up to a net profit when it was due for selling or for rental profit in the future. It was a perfect recipe for success that were mutually agreed upon by both parties, especially the buyers and the sellers. Back then, property prices were soaring high. It was a successful business, a successful industry. There was capital appreciation though, but there was no cap. There was no limit. And then several years later, there was a downturn. There were unprecedented things that happened. There was a pandemic, everyone was rattled, and we slowly then recovered after a few years. And then a couple of years later, next thing we know, as early as the second half of 2024, our current president announced banning all POGO operations and its business-related activities due to its links in human trafficking, drugs, and other nefarious activities that took a downward turn. This led us to assess whether the benefits really do outweigh the consequences. However, it did not. The ban took effect and should have ceased all operations of the POGO industry back in December of last year. In real estate, regardless of what country you reside in, especially first world countries like the US and Canada, you will often hear the term bubble. Here in the Philippines, the word is often misused, it's misconstrued, and has always been linked only to oversupply of inventories. And this is where research or facts are very critical. The documentary Inside Job is one of the best films I have seen. It is informational, it is research-based, factual, and yet entertaining. The movie revolves around the global financial crisis of 2008 and the building blocks of a disaster waiting to happen. And that includes one of the biggest housing market crashes in history, which was primarily triggered by predatory mortgage lending of subprime loans, unregulated financial markets, huge amounts of corporate and consumer debt, and so on. The list piles up, and I highly recommend that before we even draw conclusions, that we do our personal research and learn from history. So you see, there's so many considerations, and it takes more than an oversupply in one of the 149 cities in the Philippines to burst a bubble in the whole country. It is too early to conclude. So there's a question of a slowdown. Well, there really is, obviously. Like during the pandemic, there was, and even decades or years before that. And we can't avoid it. This thing that's happening is only a cycle. Like for example, electricity rates. Gas prices get a price hike. So do consumer goods, construction supplies, and the stock market. But these don't necessarily mean that everything crashes all at once, because these macroeconomic factors have safeguards to ensure that everything will revert back to normal when it is ready, when it's due. So take note that as early as 2015, there already were rumors of the Philippine housing market crashing. And 9 years later, here we are. We still have yet to see what the effects are or where this whole situation leads us. Of course, there are challenges, and in the perspective of a real estate broker, I would identify a few. Like for example, a slowdown in real estate transactions, both in the sales sector or the leasing department. And there are too many inventories, meaning more competitions for property owners. Also, there is a shift in the types of properties that property buyers acquire. For example, from acquiring commercial or industrial properties instead of residential properties, which are more costly. You see, acquiring commercial properties or industrial lots are more costly to develop or to maintain. And then there is also the aspect of future-proofing the housing market and, most importantly, regaining customer confidence. Currently, I've heard and I've seen buyers, some of them are even waiting for a further decline of property prices, which is, unlikely to happen, especially in the high-end to luxury market. If there are challenges during these difficult times, of course, on a brighter side, we must also look into the positives. Because what else can we do, right? Like for example, number one, interest rate cuts from Bangko Sentral mean more borrowing power and consumer spending. There are low mortgage rates right now that may attract future property buyers to invest in properties that may in the future hedge against inflation. There is a high inventory in the market for both pre-selling, even in the resale market, and this only means that we have already entered the buyer's market. So what does this mean? For cash liquid buyers or those who have the capacity to pay, in the long term, there are more options to choose from, and developers have more reason right now to relax their payment terms. A few years back, I have seen developers offering payment terms of just 3 to 4 years. But now you can see that some of the properties that they're offering in the pre-selling market would extend from 5 years to 7 years. And I guess it's also worth noting that this is because construction period right now have been extended as well. And next, I want to call this the affordability crisis. Unlike the previous years where rental costs were too much, such as those in the Bay Area, Bonifacio Global City, and Makati, Right now, the rental and purchase rates will reset, and in turn, it will be more viable to a wider pool of local investors, buyers, or even locators. And lastly, the most important, especially for you guys who are planning to buy your first property, planning to invest in your first ever property, the young ones, the new ones. Purchasing real estate has always been a good hedge against inflation. It appreciates in value, it is tangible, it will stand the test of time, and can be transferred to your heirs, to your beneficiaries, or even to your neighbors. And regardless of whether you sell your property or not, in the end, this is a purchase that you can live with, you can live in, and eventually you can utilize. So with all of these things happening, what can we learn from this? What can we learn this 2025 or from the past years that we've seen a lot of research papers, articles, and news? And as much as possible, what we want to do now this 2025 is to have a better outlook, better performance in the real estate sector. So you see, there are so many speculations of the bubble trouble, and this has winded consumer confidence both in the office and residential sectors. It is worth noting, though, that several key factors affect the decline of an economic sector, and one trigger alone, like I said earlier, does not necessarily collapse a whole market. While some people, some investors fear of the decline as headlined by news outlets, we really have yet to see tangible examples of properties declining in value, especially in the pre-selling or inventory units from developers. It will be unjust for developers to just suddenly offer the same residential property sold yesterday at a discount right now. So what they usually do to adapt is they become more lenient and become more considerate with their payment terms. But so far, really, I have never seen properties, especially from major developers in the country, offering their properties at a discount of 30% less right now compared to how it was yesterday. So some of you will argue that property prices really are declining. The lowering of these prices may be true, but we have experienced this more in the resale market, where prices are easily adjusted by sellers or owners who rely solely on inquiries or comparable transactions within their area. I was just in the US a few months ago, and I have compared property prices. We have seen real estate prices in Metro Manila and its neighboring cities, especially the south and the north, go up at times. And these are all compared to prices in the US, in Canada, and other first world countries. Some even say they'd rather invest in these first world countries than here in the Philippines. But you see, it's not just about the price. It's the value that these properties bring in. The property right now, condominiums, residential lots, commercial areas, even retail or industrial developments have been evolving. They have been going as far as innovating and introducing new technology, new developments in their projects or properties. And maybe it is time to face the reality that emerging business districts should be viable options for us, for home buyers, and for locators. If not, maybe we can just find other types of real estate related investments, such as golf and club shares. We can venture into land banking, although expensive. And maybe we can also check out real estate investment trusts or REITs. And if we are into investing properties, the first thing that we consider is location. Location, location, location. This is what you usually hear. Location is very important. And as long as proper infrastructures are in place, price to a certain degree will only be a figure. The value that you put in and you see in your current property right now, or the future property that's being offered to you, or the one that you're looking at to invest in, it will still determine your idea of what a real estate is. So again, happy 2025. My name is Ralph, a licensed real estate broker, and this is The Shortlist.